Hey guys, what is going on? Welcome into the video. So we've got a lot to get to in this one, and we're going to start off with going over what happened at the end of the last week. The last week we talked about the false breakdown setup and how to trade it, and this week the pattern set up perfectly again, and I tweeted about this, the potential scenario to play out on the Thursday before the close. So this is what we were looking at in the after hours session on Thursday, and this is versus what played out last Friday and then the Friday before. Patterns love to repeat themselves, and the false breakdown setup is one of the most powerful. This is then what we saw play out on Friday. Once it broke above 38.20, the move was triggered and the market squeezed all shorts all day pretty much for a massive 3.5% move off of the pre-market lows. Alright, so now zooming out, this is the setup that we're looking at for the S&P into next week. So we could say that the market is breaking out here as it closed above the downtrend line resistance, but it's not going to be that easy in my personal opinion. I think we could be setting up for a dump very soon. So the number one reason why I'm saying this is that we have the November FOMC meeting in this upcoming week on the 1st and 2nd. Wednesday the 2nd will be the important day when we get the rate decision and Powell's speech. For this, the market is currently pricing in a 17.8% chance for a 50 basis point hike and an 82.2% chance for a 75 basis point hike. I'm going to be talking about how I plan to trade this event later in the video, as in my opinion this is a major risk to the market in this week upcoming. So let's take a look at some more charts to explain why I'm leaning bearish and think downside is likely this upcoming week, and then we'll be going over some possible scenarios that could be playing out in the week and weeks ahead. So first up, the SPY is backtesting this super important multi-year trend line. This is the spot where it bottomed in June, and then the breakdown below it in September is what triggered the next leg down. It does feel likely to see rejection here, or might even see a pop above this early in the week, and then close the weekly candle back below that trend line. And this would be a bearish reversal candle put in and indicate more downside is coming, but that is just one scenario to consider here. The next chart that has me leaning bearish right now is the VIX. So for those who are unfamiliar, VIX is the volatility or fear index, and this is inversely correlated with the market. So when this goes up, the market is usually dropping. So on the 4-hour chart, the VIX is heavily oversold as of right now. It has only been oversold 3 times in the past year, and each time that it has been oversold, it resulted in a bounce and then a spike not long afterwards. If this does play out again, you bet the market will be heading down, and probably pretty violently. The next chart is the McClellan oscillator, which is another overbought/oversold indicator. Currently the market is in the heavily overbought area, and each time that it has been in this vicinity in the past year, a drop has either followed right away or followed not long afterwards, another pattern along with the VIX. So the next thing that I am a big proponent of is watching price action leading into a major catalyst to tell me what the market is expecting and is pricing in. For example, if the market is running up into a catalyst, my expectation is that the market is pricing in good news, so if it turns out to not be as good as hoped, the catalyst will quickly turn into a sell the news event. And this is exactly the opposite for if the market is selling off into a catalyst. My expectation is that the market is already pricing in bad news, and there are high odds for this to turn to a buy the news event, no matter what the news is. This is exactly what we have seen with recent catalysts. The market ran up into July FOMC, which then turned into a sell the news event. It went down, ran up aggressively in the 4 days before August CPI, and of course that turned into a sell the news as well. We then sold off aggressively leading into the September CPI report, and it felt like the market was already pricing in bad news, which it did turn out to be bad, but guess what? Because the market was already oversold, it turned into a buy the news event and ignited a large rally. So here we are sitting right now, leading into the November FOMC meeting, and of course anything can happen, but what do you think the highest probability reaction will be? That is of course going to be a sell the news event. We will see if this plays out. Now taking a quick look at the fear and greed index, the market is now back to experiencing greed. So let me say it again, this is not a favorable condition at all leading into the major FOMC catalyst later this week. And finally, at the end of the day, you have to think about what is going through the Fed's minds. The S&P has already rallied 12% off of lows, and to keep it simple, the Fed does not want the market to go higher right now. Think about it logically, if the market goes up, consumers are benefiting and feeling more rich, which leads to higher spending, which leads to inflation taking longer to come down. We really have not seen inflation come down yet, and even though we are likely to see it come down soon, the Fed is backwards looking, not forward. A bunch of investors have been calling for a Fed pivot, but I think that is just straight hopium and highly unlikely to happen soon until we see inflation start to come down substantially. Alright, so now getting back to the futures chart and talking about the most likely scenario we will see in this upcoming week, in my personal opinion, I think that it is unlikely we'll see any large move up or down before the FOMC meeting. The market hates to follow through on breakouts or breakdowns before a major catalyst. Maybe we slightly break above the wedge resistance and then we may retest that downtrend line as new support, but overall we will likely have choppy consolidation ahead of the FOMC meeting. Then if the catalyst goes how I personally think it will and is most likely to, this can quickly turn to a false breakout, then lead into a breakdown from the rising channel support, which can then trigger a deep sell and get ugly again quickly for the broad market. Now the opposing scenario, let's say that the Fed slows rate hikes, pivots, or anything that is super positive news like that, then the market could pop big and see a move into the 4,000 to 4,100 range, which is the area where the 200-day moving average is at currently. Just to be clear though, I think this scenario is highly unlikely, but of course it is always a probability to consider. Now for anyone looking to trade the FOMC event, the most important thing to remember is to avoid getting faked out. The chart that we're looking at is the last FOMC meeting in September. So the first move is almost always a fake out, the second move also is likely to be a fake out, and then the third move is usually correct. If there is game-changing news, it can obviously go straight up pop or straight up dump, but overall this price action is a good blueprint for trading the FOMC meetings. The rate hike decision matters a lot less than what Powell says during his speech 30 minutes after that, so keep that in mind of course, and my personal rule is to not trade until Powell's speech is coming to a close, and it's fairly obvious what his tone is and what he has said. So be prepared for a wild week in the stock market. As you guys know, I'm personally bearish and expecting downside this week, but of course anything can happen and be prepared for any scenario. I'll post on Twitter the key support and resistance levels to watch for direction ahead of the FOMC meeting on Wednesday, along with any updated thoughts and opinions. So make sure to follow me at the Stockwatch2 on Twitter. And hope you all enjoyed and hope I provided some value to you in this video. If so, make sure to hit the like button and subscribe button below. It helps me out a lot and I would greatly appreciate that. For anybody interested in joining the private Discord chat to get all my personal trade alerts, that is the first link down in the description. And I will catch you all next time. Good luck in the market this week. Peace out.